We've got three people that are coming up. They've all been going back and forth to Washington to help us. If they'll come on up, our three panelists, Thomas and Joe and Clint, and we'll get started here. There were a number of trips that started actually in the first year of the new Congress, 2023, but we had a really rush of meetings in Washington dealing with economic assistance, $10 billion for production agriculture. Peanuts got a piece of that. Peanuts was the one outlier since we did not have the world market price. We were left out. Originally, when I say left out, we were included in the bill, but candidly left to USDA to determine what our payment would be. So we struggled with that. We were able to get that worked out with the Senate taking over, and that was very helpful to us. But all three of these guys were coming back and forth, along with a lot of others. All commodities brought about 80 growers, bankers, and agribusiness people to Washington at the close of 2024, and to push this over the line. So we'll let these guys introduce themselves and briefly, and then we'll move on for some discussion. Joe?
Joe Boddiford from Sylvania, Georgia. That's 1 hour north of Savannah. For those of you who are not familiar with that area, grew cotton, corn, and peanuts. And peanuts is the main thing in today's world. It's been the one thing that's keeping us afloat.
I'm Thomas Adams from southeast Alabama, Henry County, and approximately 100 miles north of here. I'm a peanut producer. We grow peanuts, corn, cotton. Also have a cow-calf operation and a contract grower operation. I serve on the Alabama Peanut Producers Association.
My name's Clint Hood. I work with Synovus Bank. I run the Ag and Timber Group for the Southeast United States, our footprint at Synovus. Raised on a farm, east central Georgia, where we're getting a good bit of rain right now. I grew up with peanuts from the time, I think 1969 was the first year Daddy planted peanuts. I helped him rope off 11.2 acres for our allotment. And we've been growing them ever since, up 3,000 acres, back down to 1,000. Peanuts has been what has kept us in the game of farming. I have my wife and I have 6 children. 5 of them have not stayed on the farm. They've all gone off, and I think they live in 4 different states now, giving us grandkids. But I do have the youngest one. It's 13. I'm holding out that he might be one that would stay on the farm. I started out on the farm out of school at the University of Georgia, but that was in the 80s, and I had to leave the farm because of economic conditions, and was able to get into ag finance. So I've remained close to it, but I was in Washington last week testifying, and one of the things that I mentioned to them was how tough it is in agriculture today. But to go back to the 80s when I actually had to leave the farm, it's become very important to me to try to figure out how to keep farmers on the farm.
Well, all of these gentlemen were involved in the economic assistance piece, and we struggled to find the money for it right at the end of the year, and it's closing the gap, and it didn't seal until the last week. But I know the bankers and Clint, you personally, and others came to Washington with growers to help make that pitch. Shellers were there with us, buying points. But Clint, what do you, we'll start with you. What was the impact, in your view, at that point in time when the lending season was just beginning to heat up? What was the impact of that economic assistance package?
This is my 37th year, Bob, in ag finance, and it has been by far the most difficult to be a banker because you want to loan money to everybody that's in the field of agriculture, but it's been extremely difficult. And one of the difficulties is trying to get a farmer to qualify from a repayment standpoint. It's all about cash flow. It's all about how much collateral you have, it's not about how much carry you have. It's about can you cash flow. And these programs became repayment sources, not as gravy, but as necessity to either get the farmer out of the hole that had been dug from low commodity prices and outrageous expenses, or to be able to actually demonstrate from a number standpoint that the farmer could actually qualify to pay the loan back, that you're buying the loan for the following year. So it was unbelievably critical. It caused us to have to wait longer to get people answers to their operating loan than ever, because it was, the payments were promised, and it was a crapshoot how much you were going to actually receive. And you had this amount of money that was a shortfall from the prior year. And this is more than Georgia. We operate in 5 states and 2 contiguous states. It was all through the Southeast. Farmers sitting there waiting to see what kind of payment they got in order to be able to go again. It was crucial.
Joe, Thomas, in your communities, farmers and local folks, what were you hearing?
With the ECAP, for those that were like myself treading water, somebody come by and threw me a life jacket. I'm not in the lifeboat yet. Hopefully, with one big beautiful bill, a lifeboat's on the way. But ECAP, I had somebody say, well, I guess all the farmers fixing to buy new trucks and tractors. I don't know if any of that money went to new purchases. In my area and on my farm, it went to pay down last year's debt. We have burnt through cash the last few years just trying to survive. And we robbed Peter to pay Paul so much that Peter was broke, and we really, that ECAP really saved us. We needed more, and I like the initial numbers, and I know they couldn't find the money for it, but what we received without it, many of us probably wouldn't be farming today.
I think Thomas explained the situation very well, and the fact that I did not see any new pickup trucks. Not one new pickup truck. But the majority of them, no, it was not nearly enough money, but it did give them a breath of fresh air, an infusion of money that helped go pay some creditor down to get on better terms with that creditor, or maybe a second creditor. In general, it was just, enough to maybe make an impact with one creditor, but it did give hope. And I think, like Clint said, able to, hey, we could go back and recalculate your loan situation and see what we can do to make it all work out. And so obviously we lost some growers this year, but that's allowed a lot more of them to continue to go through 2025. Now, what's going to happen for 2026 still remains to be seen.
Thank you. Next, we want to talk about the one big beautiful bill. We'll start with Joe. You've worked on a lot of farm bills. Tell us the impact of a farm bill on peanut growers and communities, rural communities where we live.
Well, this farm bill was long overdue. I think the last one worked fairly well for a number of years. We had ordinary inflationary practices, ordinary increases in input costs and all of that. And then COVID came along, and we had folks that just were not thinking clearly, and we turned the world upside down, and we still hadn't got back to a regular or doing business. It's been unfortunate. But anyhow, the price of doing business, particularly agricultural business, just exploded. And peanuts, if you made a good crop and you contracted at the right time, you probably made a few dollars. And it was, but you can't have, in my case, I've got also cotton and corn. You can't have one crop carrying 3 crops. So stuff. And I think that this big, beautiful bill has given us hope for the future, but I'm concerned about a certain percentage of growers making it to 2026 because, the extra PLC price payment that we will get in 425 will not occur until fall of 26. And I guess Clint, the bankers, I guess, are going to look at another creative way to try to make things work. In general, bankers are doing their best to keep farmers on the farm and that kind of stuff. But anyhow, we got hope for the future.
Thomas, what's the value of these farm bills, this farm bill particularly?
In my last statement, where I said the life jacket, the increase in reference price is the lifeboat, and I just hope I can continue until I receive that payment, because as I said, we burned through cash and cost of production has just increased so much, and we really need that PLC payment to maintain. In a perfect world, we wouldn't need that PLC payment. that there would be enough markets. But we all know we have a season to plant. We can't hold out planting waiting for prices to go up, because then we're going to start planting windows. So we have to plant even when we're planting a crop that we consider as a loss. To go back to cotton, I had a good friend of mine tell me, if it's good enough to plant, it's good enough to price. I said, well, it's hard to price something and get a loss. And so that's where these safety nets really come in. It allows us to plant a crop on time and hope that prices will increase at harvest time or when we have the crop to sell. But we know sometimes supply outpaces demand, and without these safety nets, we couldn't continue to survive.
Clint, would this help us?
Yeah, one of the things that I mentioned last week in Washington was the fact that, yes, it's a safety net, but it's not hasn't been operating properly for several years. No farmer wants to activate that safety net. Farmers want the commodity markets to give them the profit, coupled with good production practices. But when you've got the commodity markets down here and the safety net of the farm bill even lower, we're sitting in no man's land as farmers, and they're not getting any help out of the markets, and you're not getting any help out of the safety net of the federal government. And the one thing that you can't fix is the markets. One thing that you can fix is the safety net. Yeah. And it was just crucial that they brought the numbers from, what was it, 2012 index or so,
yes,
up to today's.
Yes. Yeah, I think that's a really good point on all of our economists across the board in agriculture, production agriculture. We're working on numbers as old as 2010, cost of production numbers and the safety net. Thomas, you've talked about struggles of growers. If you look ahead, which you have to do, even though every lending season, every production season is a challenge, looking ahead to the 26 crop, what do you think about?
Well, Bob, that's a loaded question. There's many obstacles, but I think profitability is our main obstacle. If we could turn a profit, we could overcome most of our other obstacles, because every time we're trying to survive, we have to make top yields every year, and that's just not possible.
Yes.
And so without profit, we continue to eat into equity, and that's running out. And so with the new farm bill, with the safety net, if it can make a profit, we can overcome a lot of these obstacles. But probably the main obstacle going into 2026, I see, we're growing this crop with this safety net. It'll be fall of 2026, getting that PLC payment, is we've got to talk bankers like this into loaning us money with the promise of that money coming again, unless market price of peanuts goes up. And with planted acres, I just don't see that price going up. With 1.9 million acres planted, domestic consumption around 2 million tons, if we just simple math, 3,600 pounds of peanuts, we've got 3.5 million tons of peanuts to deal with. So I'm afraid the price of peanuts will probably be lower come fall, unless there's a major weather event, and I hope that doesn't happen.
Yeah. Joe?
Yeah, that will be an issue. Again, we need to make it at least another 15 months. And if the revenue that we receive out of this crop, and corn prices are down a right good bit, cotton prices are holding their own, but they've been in the pits for more than a year. And if peanut prices drop, then our total revenue for the farm this year, and of course other people, I know the cattle folks are doing fairly well right now on the cattle side. They're carrying. But I got to thinking about most farmers have built up a little cushion over time. But that early 20, 21, 22 time frame, when some of our input costs went up twice and triple, we wiped out a lot of equity in a quick fashion. And now we got to build it back. But first we got to survive so that we can try to build it back.
Clint, from a lender's perspective?
Yes. To me, the biggest challenge is going to be qualifying for the operating loan to go again next year for those that use operating loans. And A lot of folks say, well, that's just an emotional decision for the banker. Well, it's really not. It's an economic decision. But it's also a decision made because the banker knows that the auditor, the bank examiner is looking over our shoulder. And that's gotten a lot more difficult since the Dodd-Frank Act and the regulations that they put on banks. We can't put a criticized loan on the books. We can't put a substandard loan on the books. And a lot of these loans, through no fault of the operator, they don't cash flow. So when you're showing on paper that your operation can't repay the debt, you know, on paper, that's your best scenario. In real life, it usually gets a little worse. So that's the thing that bankers are going to be faced with is how do we get them qualified, not from the bank's perspective of the policy, but from the bank examiners looking at the banks.
Thomas opened the door on supply outpacing demand. What are your thoughts about this crop and future crops? What can we do differently to move product?
This may not be the correct answer at this time, but I do think as a producer, I and many others have an unrealistic expectation of moving peanuts sometimes. We grow and we expect our state organizations, National Peanut Board, oh, they grew this many tons of peanuts, they got to find a home for it. And all of our state organizations and the Peanut Board are working as hard as they can. But if we go from a 3 million crop as last year to a 3.5 million crop, that makes the burden on them that much more difficult. So as a producer, ways to overcome that, we need competing crops that we can take some pressure off peanuts. And I'm not pointing fingers at anybody because on my farm we've continued to shorten rotations and to continue to increase peanut acres because it was the only way we could do it to survive. But without a competing crop, it's going to be difficult in the coming years. And I don't know what that competing crop should be. It was mentioned yesterday in a meeting, and I love it, as grain sorghum. That is a perfect rotation for peanuts. We just don't have a market. Why they don't use it in chicken feed? I've heard there wasn't enough grown in the United States to feed the chickens but a few days. But if they would buy it, I guarantee you they could get a lot of it grown because it fits in a good dry land peanut operation. And I think as producers, we need to promote our own product, not just depend on the organizations. We spend a lot of money with organizations, but when you look at it, it's less than 1%, mainly of our price. It may be 1% of loan rate, but we spend very little bit of money for marketing as an industry, and I think that could be better. Another thing is supporting our packs. Without the safety nets you had on that screen a while ago, this ring would probably be empty next year because we cannot continue to survive at current cost of production and where our prices we're receiving for our product are. So I don't have the answer other than we need something to help take the pressure off of the heavy acres of peanuts that are being planted.
The one thing I see, and I bank a lot of different commodities around Southeast, and none of them do a better job of promoting themselves in the peanut industry. You've got the got milk, you've got the Angus beef, all those are great programs, but the peanut programs are really good for self-promotion, and that's one thing I've always believed in. Quit your bellyache and get out there and promote what you do, and the peanut industry does a great job of that. The thing that I'm seeing that is enlightening, I think a lot of the consumers the most is teaching these new parents that peanuts aren't bad, peanuts are good for the children. That's where you got to start to continue to grow the market.
Joe, do you have comments on this?
You know, again, I don't know if there's any peanut-only farmers in this room. Most of us grow multiple commodities, and as been pointed out, that's one of our major boat anchors, so to speak, that are inhibiting us, particularly cotton. We spent so much money investing in the cotton industry, and our cotton prices, you know, the pencil probably says a negative $200 an acre.
180, $30.
Okay, I like his number better than mine. Yeah, I'm just saying, you know, when you put that times 1,000 acres, that's real money. And, you know, or if you farm 2,000 acres. But anyhow, that is a challenge for us. And I do think that certainly on the peanut side of it, and I'm not sure how much more we can actually increase acres without reducing our yields because of poor rotations, but I know that through Georgia Peanut Commission, we're looking at non-food uses, you know, trying to see if we can find a way to get into these green energy markets with some renewable, with some peanut oil, got some studies going on putting peanuts in chicken feed rations. Boy, if we could just get a 1 or 2% inclusion in there, that would make a tremendous difference in the consumption. It would be nice to see some other outside factor, you know, more demand for peanuts or better yet, more demand for the other commodities. $1 cotton, we wouldn't be worried about overproducing peanuts. We'd be in a better shape.
Right.
All of those are challenges. And I do want to reiterate what Thomas said about the pack. I know a lot of us let Rodney handle it, Joe handle it, some other folks handle it, but we all need to participate in some fashion. And we do have a raffle shortly after this meeting.
Yes.
So these tickets can be purchased. But just remember, there's a lot of moving parts that go into making this industry successful. And again, we got some tremendous encouragement with the big, beautiful bill.
We'll wrap up with a question to Clint, and then we'll take questions from the audience if anybody has one for the panelists. Barring a natural disaster, Clint, what are your thoughts about the 26 crop and financing for growers from a lender's perspective with the variables we have today, and knowing that even though we've got the new program for the 25 crop, the reference price will not kick in for payments, PLC payments to growers until fall of 26. So just any thoughts about what we're going to face in the coming months?
Well, 24 was hard. 25 was even more difficult. We had to get creative, a little voodoo economics to make some of them work. And a lot of what you're doing there is you're trying to give the farmer every benefit of the doubt on cash flow that they can generate. Even adding in some of the ECAP programs and all, even though they weren't sure bets, we would add them in anyway. 26, unless something changes with the commodity markets, I'm not sure anything's going to change on cost. That's going to be a real challenge. And, you know, some of you have probably heard me mention this. We have a banker's creed that we try to follow, a good banker that wants to stay in business for years. We have what we call the 5 C's of credit. The first C is character. You got to make sure your borrower's character's in place. The next C is capital. How strong is their balance sheet? How deep is their pocket? How long is their shirt tail? The next one is your capacity to repay. Are you going to produce enough income to not just pay back your bank's debt, but all other debts too? The fourth C is conditions. That's market conditions, economic conditions in your industry. And the fifth C, collateral, that's one that a lot of folks think that the bankers thinks is the most important. But to me, it's not. It's by far the last C that you want to pay attention to, because you've got a primary source of repayment, sometimes secondary, and then tertiary. The collateral take back is way down the list, and no banker wants to do that. So when you're looking at what we're facing for the coming year, to me, the two most important C's is character, and for the most part, we've got character that stays in place in our farm community now. Part of it is because farmers still have strong balance sheets. Their assets are worth more than what their liabilities show. And back in the 80s, when I had to leave the farm, we were insolvent. It was upside down. We owed more money than what our land was worth. But God's been really good to us from an equity standpoint, as Joe was pointing out a while ago. And equity comes, in my mind, basically from two fashions. One is when you pay down debt, you're creating equity for yourself. The other is when the market gives you an equity. And here in the southeast part of the country, our market equity has been really strong. So sometimes I wonder if some of these farm values are abnormally too high, but that's been a really good contributor to the equity piece, which carries back to the capital part of the 5 C's of credit. How strong is your balance sheet? But the second most important to me behind character is the capacity to repay. And right now, it's hard to look at any operation. I don't care whether you've got debt on it or not. It's hard to look at any operation right now and see where there's positive cash flow. We bank a lot of farmers on the liability side of our balance sheet. In other words, we loan them money. But we also bank farmers who don't borrow any money, and we handle their deposits. And even farmers that are farming out of their pocket have had their equity eroded. That should tell you something, how bad things are. It's one thing not to be able to pay a loan back when you've got a good bit of debt, equipment debt, farm operating debt. But it's quite another when you don't have any of that debt and you still are eroding your equity that you've worked your whole life for. So I guess unless something changes with the commodities and we hear more of this sound of good rains, we're in for another rough year, Bob, for 26, getting people qualified.
I got a quick follow-up question, which I think is going to be critical to financing next year. Will the regulators let you take into account that PLC payment that's coming in October?
I think the answer to that is yes, because we're going to count it at our height. And I'd rather ask forgiveness than permission any day, especially when it comes to keeping these farmers going.
Do you think that's going to be general majority of bankers?
Bankers that aren't running scared, yes. But bankers that are running scared because maybe they've already had some hiccups in their portfolio and they've lost a little bit of money, that they might have a hard time accepting that piece. But I'm very fortunate being a bank that our portfolio is very strong. Part of it's because of the way I choose the customers. The last thing you want to do as a banker is to get your ag portfolio in trouble, and then all eyes are on it, and you can't help people. So you got to keep your portfolio clean.
Don't you think that'll be a very important block in securing a loan?
Very much so.
Look towards it. You know there's going to be a PLC payment. It's going to be more than $100.
It's a cash flow source. So yes, that's exactly right. It will be very important.
All right.
The regulators can sometimes stop you doing things that make sense.
And I was preaching that in Washington last week.
That's right.
Okay, good.
All
That's
right.
where our regulations come from.
We've got time for a few questions from the audience. Anybody have any questions for these panelists? Mr. Harrell.
Just want to ask the panel, I know Thomas, you're kind of new, in the peanut leadership world. Joe's been on a long time, chairman of the Board of Peanut Commission. I've known Clint for too many years, but all of y'all and people in this room, most people are affiliated somehow, with your leadership. If I had $1 for every time I've seen Don Taylor talk to Bob Redding on the telephone, since I've been involved in the peanut industry, I wouldn't be farming. But how important is the guy standing at the podium over there for what we have on peanut farming?
It's hard to put that in words. Didn't mean to jump ahead of y'all, but I like this question.
Thank you.
I think we need to raise some money and get him to lobby for cotton.
No.
Maybe that would help the peanut farmers.
Bridge too far. Thank you very much. Other questions? Mr. Williams.
I got a question. I think our main challenge in this economic situation we're in is we're fighting against, like Brazil, that they can grow 2 crops a year, and we can't grow 1 crop a year because of where we live. And we have to fight against the WTO because, like cotton, a lot of the reason they couldn't do no more to help cotton is because then they'd have to fight with the WTO. And they can grow 2 crops a year. All their inputs are cheaper. And I mean, what can we do? I mean, I why should we be penalized because of what we're facing? Everything we buy is so much higher than what everybody else buys. I mean, after COVID, everything was double and triple what it used to cost. It's just, I mean, Brazil, they got an advantage against us. And until we get that situated, I don't see how we can be able to compete against Brazil. I mean, what do you think about it? I mean,
Comments?
Joey, I don't want to be doom and gloom, 'cause I mean, if I'm going to be doom and gloom, I need to go ahead and line up gauge and say it'll be done with it. I need to be positive. We're going to work through this situation. I sometimes say I'm not as concerned about the current situation as I could be, because I say I survived the 80s. And Clint knows exactly what I'm talking about. In my county, we lost over half of it. But some factors that are really working against us, the fact that we have come into a new time with just input cost. And I sometimes use this thing, and just using rough numbers, but over here with the things that are going on, the things the government is encouraged and all of that, they want us to pay employees $30 to $50 an hour. Now, what's that person in Brazil getting paid? You can put a lot of freight on that stuff and get it over here. And then they don't have to have those cotton pickers with the death on them. Those sort of things. And I don't know how much cheaper those pieces of equipment are, but if I'm not mistaken, they buy brand new from John Deere without those bells and whistles that none of us want. And that's just going to be a challenge. It's going to be a challenge. I'm not going to try to solve it today, but I will try to solve it as time goes on.
Can I?
Thomas, yes, sir.
I've heard some different things, and not right, but I'm going to relate this to cotton. I know this is a peanut meeting, but I see the way around that is trade agreements, and I don't know how they would be, but I heard somebody a lot more knowledgeable in the cotton industry than I am telling a meeting that we domestically consume somewhere around 25 million bales of cotton in this country. We don't spin it, we don't make the fabric, cotton is exported, it's brought back into this country in finished products. If those numbers are correct, I probably shouldn't say something I haven't checked. But we grow 14 million bales and our cotton market is terrible. I would like to see trade agreements where they use our raw commodities, and even if it goes to a foreign country to be in a made and finished product, it's U.S. grown cotton or U.S. grown peanuts brought back into this country, and make that trade agreement sweet enough that they want to use our product instead of Brazil.
Jerry, I don't have a specific answer to your question, but when you say the word Brazil, I go back in time. I know how Brazil became one of our biggest partners. If we remember back in the 80s, some of our policies actually caused that, make a country have to go into South America and push those jungles up and so that they could feed their country over in Russia. First thing I would say is we don't ever need to make that mistake again. We don't use food as a stick to beat people over the head with. The second thing I would say is we need to be cognizant of how important these trade deals are right now. I look at the news quite often. I've started looking at it a lot more often 6 months ago because there's something wonderful in the news. That's been very unusual. But these trade deals are just monumental for us. And we don't know where the benefits are going to come from, but based on some of the folks I talked to last week, Zippy Duval and others, our president's got our back on this, and I think that's going to be the quickest result to get our situation improved.
We've got time for one more question. Go ahead, Joe.
Add to that. On the cotton side, I mean, cotton's been my companion crop for a number of years, well, since the early 90s, and we continue to grow it because we can produce it in difficult dry land conditions. But it seems to me, and again, I don't know how much spare time Bob's got, but they probably wouldn't listen to him anyhow on the cotton side of it. But how can the cotton industry be really successful when they've got to export, what is it, 2/3, 3/4 of the production out of this country?
3/4.
It seems to me with the technology we have, that somebody could and would build a plant to utilize that cotton in this country. I think that's a key to it. I'm not sure how to convince the cotton leadership to look at that and push that in some fashion, but I think that's a critical issue.